Good morning, guys. How are you all? Just let me know who is over here. I can't see any messages. I can't see anyone's message. So I really don't know who is over here. So just let me know who is over here. You can hear me or not. Let me know everything. It's a little late. By the way, selling opportunity over here. So keep an eye over here. If it can make a fair gap, that is my selling opportunity. Something like that. Something like that. Market structure shift. So there. Stop loss is going to be here. Target profit is gonna be there. Should be on tick above the candle which has made this parallel gap. Let's 15-minute chart. There is a gap. Nobody should close above the 50% of this week, 50% of that week. There is a small bearish gap. Don't want to see that this market will trade that bearish gap over here. So if it come to this bearish gap, that means it is still bullish and market will keep going higher. Got stopped out. Try to wait here. Start with a very bad way. Doesn't matter. If it failed to take this high, come back again, closed below this low. I mean, this parabolic cap will take re-entry around this area. Will take re-entry. If it failed to take that high, if it come to this parabolic cap again, will be bullish again for that high. Don't want to see that this will come here to this parabolic cap. So honestly, this will come back again, closed below this parabolic cap. Will take resell when it will close below this parabolic cap before taking that high. If it has taken that high, that means it's bullish. It's not bearish anymore. Overnight big runs, morning session can be little choppy. It will go close below this fair value gap. Will take re-entry to this fair value gap because this fair value gap should, this setup when market structure shift after taking the buy side liquidity here, when market has taken that buy side liquidity, give me the market structure sheet fair value gap. That should be the entry. Stop loss should be above that high which has taken the liquidity. Not able to put the stop loss over here, so put the stop loss above the candle which has made this fair value gap. If it failed to take that high, this setup is still valid. It will come back again, close below this fair value gap, will take re-entry. If it come to this fair value gap, which is 15-minute bearish gap, that means it's bullish again. It's not bearish anymore, it's bullish again. So to change my mind, I have to think about the buy until it is not coming to this breakaway gap, which should work as a breakaway gap. Until it is not coming to this breakaway gap, it should keep falling at least until this last fair value gap. Then we'll see the midnight open. So here is the midnight open. In the meantime, I really don't want to see anybody close above the 50% of that week. From 15 minutes set, nobody should close above that week. So if it take that high, that means I'm bullish, I'm not bearish anymore. If it take that high, it will shift that high. It's a buying opportunity from any kind of fair value gap or order block or anywhere. If it shift that high until the first presented gap. Why it is too much volatile? What happened overnight? Big run, right? One, two, three, four, five, six bullish candle. Yeah, it's overnight big run. Let me read this gap. Not a good sign. Will get chopped up here. Should not get chopped up. 15-minute fair value gap should not hold the price because this is a bullish market. Market has taken that sell side liquidity, traded this fair value gap over here. After trading this fair value gap, made that another market structure shift over here. So when this market structure shift happened over here, there is no fair value gap. Yeah, this is the order block. I should not get stopped out over here. It should keep going higher. Doesn't need to come back again here to this area. If and only if this is chopped up market, that means seek and destroy mode. Otherwise, it should not stop me out. It should keep going higher. Why it stopped me out? This should not respect at all. It should go higher. Okay, in my opinion, it should go higher, but it can be little volatile or chopped up market to trade this order block one more time, consecutive order block before going higher. But it should go higher, go through this fair value gap at least until this area, and then next target is this rejection block. Until this area, it should keep going higher. It can be little choppy market little bit because I am not able to put the stop loss, huge stop loss because of the volatility. I don't know why this much volatility. So not able to put the stop loss in a logical level, maybe just have to let this go. Otherwise, I don't know. It should go higher. That's all I know. Got two losses. Big loss. After that big run, when market has made this fair value gap, bearish fair value gap, it should work as an breakaway gap. That means market doesn't need to, if it trade that gap, that means market is not bearish anymore. Market is still, it is bullish. So I have to look for the buy. So when I got this market structure shift, this is the fair value gap. Would love to take that entry from here. Tried to put my stop loss below that candle which has made this fair value gap. Overzealous came until this area here. So still this is bullish. Liquidity taken here. So still it is bullish. I'm not thinking that this is going to hold the market. So it will keep going higher. It will close above this gap. I'll try one more buy. This time stop loss is over here around this, below this low. From there this low here, but usually the stop loss should be below, little below. Okay, here, just little below. I mean, not exact low, little below of that low. Now it should work as a trap gap. That means market should not close below this parabol gap 50%. This parabol gap 50%. It should not close below here. It should keep going higher. This setup is still valid because after the market structure shift, this is the fair value gap. This box is the fair value gap that should hold the price. Came little lower to trade this area, around this area, which is the inverse gap. It is acceptable, but this time it should go higher with speed. And I will try to take a partial here to this first presented gap, which will be like 47 handle, as I took some losses. So I will try to take the partial here, will hold my trade until this rejection block. After midnight big run, it can be little choppy. Little chop. This guy should work as an order block. This candle should work as an order block and should help send the market higher. This order block should hold the market and send it higher. We'll try to take the partial to the low of this first presented gap and hold my trade until the rejection block around this area. Perfect 22 YT model. After taking the liquidity market structure shift fair value gap, perfect 22 YT model. Trade that fair value gap. This is the low or whatever it is. This is the lowest down close body close candle. If it is broken, that means this whole morning session can be chopped. Now if it doesn't work, this time if it doesn't work, this whole morning session I will not get not even a single trade. I'm pretty much sure about that. It should keep going higher. Went through this bearish gap which has made over here around this area. Otherwise, if I want to look for sell, I have to wait until price close below this fair value gap, because there was the first opportunity to look for the sell here. Market structure shift, fair value gap. That was the first opportunity to look for the sell over there, by believing that this market is not coming to this fair value gap. As it came here one more time, this bullish market, it should keep going higher. I need speed. This consolidation is not a good thing. This should work as an order block. What is the mean threshold of that order block? Mean threshold has been traded already. Yeah, now let this go, and I believe that this will work. It has to work. There is no other way. It has to work. Respecting little bit this bearish gap by showing that sign, some kind of sign that I would love to go fall, respecting by this fair value 50 minute chart, but eventually it should be broken. Yeah, what else can happen? Maybe it will be chopped little more, but it should not chop because this is the silver bullet where market is already in 10 a.m. New York local time. Today is Friday. So around the morning session, it should provide me some kind of run toward the, I mean, high or whatever it is, the high it has made already. And then the PM session should be chopped, not the morning session chop should be done over here after taking this liquidity. And from 15-minute chart, has traded this area, trade that bearish gap from daily chart above that bearish gap. It is still there above that bearish gap. So it should keep going higher. This bearish fair value gap should be broken. Covered that bullish fair value gap over here. This bullish fair value gap covered that order block mean threshold, and the week 50%, which is the immediate rebalanced week. So all of this area I have been covered by my stop loss. That's why it is little big like 22 handle, something like that. If it doesn't work and if it fall little more, I will have no opportunity to trade around this. Okay, tap to this 50% of that immediate rebalance week. Now if it can't go higher, it will never go higher or it will never fall. It will keep doing the job. Three opportunities, no more entries for me. We'll just let this go. Not a good sign. Highly manipulative market, can't look for sell. Obviously I will not think about, not even a single sell before breaching this fair value cap and reaching to this first presented cap. Not interested to think about a sell, but not, is still not possible because this market is not working with any kind of price action or anything, just doing the manipulation, upper wide, upper side, downside. It will go higher, that is my belief, that it will come here to this first presented cap, at least to this cap, and finally it will take that high, at least that high, or maybe until the 50% of that high. So until then I can't think about the sell, just no opportunity to take the buy. I don't know why it is too much volatile. The volatility is huge over here. One single candle is like 45 handle. Why is that much volatility? Today we didn't have any news so far, I know. Any high impact news or anything, nothing. Then why is that volatility? Hmm. Nothing, no sell side liquidity. Where are you going, brother? You don't have any sell side liquidity, then where are you going? Do I have any volume balance or new wick opening gap around this area? After getting 3 times stopped out, who has the power to go for the buy again? At least I don't have that much courage to think about the buy again. But I am not interested to look for sell. It should keep going higher. I will just not able to push the button because I got already 3 times stopped out over here. All of this job after making this side just got stopped out. Though I know that it will go higher, but maybe this is the time to go for the buying opportunity now. But not I don't have the courage to push the button right now. So here this high when shifted here, it should keep going higher now by around this area. Just not have the courage to go for that buy. That's all. Breakaway gap, entry gap, boom. I don't have the courage to push the button. That's all. But thinking is this market will go higher at least until this area, and then until this rejection block, I'll keep looking for this market will come at least until this area. Just don't have the courage to push the button. But if I go for this trade, my whole loss will be mitigated. No entry gap, no entry is valid. Tap to this entry gap, stop loss is below the breakaway gap. This could be a partial area. This last parallel gap can be a partial area to the low of that fair value gap, which is near about here 29 handle. That could be a partial and should keep going higher. After 3 stopped out, to be honest, I really don't have that courage to go for that buy, but I believe it will keep going higher and it should keep going higher. It didn't work here, it should work here. That could be a partial to the low of this last fair value gap, and then this could be the second target, which is 989 handle. So whatever loss I got here, maybe 75 handle, 25, 25, 25, everything will be mitigated around this area. I know that it will work, but as I told, after 3 losses, either it will looks like over trading, or it will be like very difficult to push the button after that 3 losses, but it should work. Bias is still bullish, not interested to look for sell. It should keep going higher. There can be little reaction from this last fair value gap, little reaction. That means it will tap to this last fair value gap, then it will fall little bit before going higher again. If it can go through this fair value gap by one candle, that means it doesn't need to provide to come back again below here. It will keep going higher without any kind of reaction if it can close above this fair value gap by one candle. Otherwise, like the way it tapped to this last fair value gap, it can be little reaction from there. That reaction should not fall below this fair value gap. The best case of scenario, it will close inside this gap. The next candle will close above this gap. That is the best case of scenario. That will tell me that it is coming for this fair value gap directly without any kind of reaction. So it closed inside this gap. I want to see this candle will close above this gap. So no bear candle. That is the best case of scenario. No bear candle. It will just keep going higher. The first reaction will happen when market will come to this 50% of that bearish gap or to the top of this bearish gap from 15 minutes. And that should be the first reaction. And by this entry all of my losses will be mitigated. Yeah, I was overzealous here. That was a logical sell. After making this bearish gap, it could fall little bit until this area. All of this area, it could fall until this area. That is why I framed that sell setup. Didn't work when I got this market structure shift from this fair value gap. It is another buying opportunity. Little choppy, took stopped out, another making another setup, market structure shift, entry gap, last gap, same direction. Not going to switch my direction from bullish to bearish even after seeing all of this fall. I should hold my bias that this is gonna be broken and market is coming at least until this area and then to the top of this area, what I showed you. So here, fall one more time, manipulation. Friday, mental capital preservation day, have to accept this one. Market structure shift, entry gap, last gap. Would love to take the entry here. I'll try to take my first partial here around this area to the low of this first presented gap. But in a short period of time, that could be a partial to this last parabolic gap. But I want to take the first partial here to the low of this first presented gap. And then would love to hold my trade until the rejection block around this area. Body close above the last parabolic gap, 1 minute last parabolic gap, that is the sign. Even if I fall little bit until maybe this parabolic gap, even if I fall little bit, eventually I'm going to be broken. That is the sign over here. By the way, if anyone would love to take a sell or if you're framing any sell setup, please go for that. I'm not interested to think about any kind of sell until reaching over here. After reaching over here, then I'll think about the next possibilities if there is any selling opportunity or not. If it doesn't tap to this gap, if it fails to tap to this gap, that means if it didn't touch this gap, you will see the expansion, huge expansion. But if it trade this gap, then it can be little more consolidation until 11:10:50 to 11:10 macro. Now I want to see a body close above that high. It should keep going higher and body should close above that high. These three consecutive candles, they should work as an order block. That means this area should not be broken anytime. When this candle will close as a bullish candle around this area, when it will close around this area, this whole zone should not be broken. That means market should not go one tick below that low, below below that low. If it can close as a bullish candle. And here this one work as an inverse gap. That means if it can tap to this gap, that is another buying opportunity, but not interested to frame the trade over here because it just tapped to the low of this area. So if it can tap over here, yes, if you remember yesterday's TM session, I outlined like this way. This should be the same situation over here. My loss will be mitigated over here by this trade. So whatever loss I got over here, it should be mitigated by this trade. So far it has provided 49 handle, something like that. So whatever loss I got over here, that will be mitigated by this trade. All I need to see a body close above that high, just a body close. If I get that body close, I'll be able to, like feel like this is coming here, at least to this low of this first presented gap. In other words, this is the last fair value gap from 1 minute chart. So it's not the first presented gap as well as it is the last fair value gap from 1 minute chart. When the body will close in 15-minute chart, if this candle can close above that high, it can fall little bit to the top of this down close candle here, to the top of this down close candle. It can tap to the top or to the open of this candle before going higher. If the 15-minute candle can close above that line or above that candle. It is acceptable to tap to this fair value gap. It is acceptable, but not acceptable to close below this fair value gap. It is not acceptable. This specific that candle should close above that high. This candle should close above that high. Exactly that candle. I'm watching actually the 15-minute chart, not that candle, the next candle. It's 1 minute 36 seconds. That means two candles. So within the next candle, it should close above that high. And this is the whole order block, which is in the black. This whole zone is the order block. This whole black zone is the order block. I need to see this bullish candle will close above that line, this candle, which is from the 15-minute chart. This is gonna be the closing of this 15-minute candle. It's not a good sign. The way this candle has closed, it's not a good sign from 15-minute chart, because from 15-minute chart, all I can see that this candle has closed below the high of this bearish candle. So I'm not going to get the order block yet. So it can be little volatile. One more time, it can be volatile. Wait until 11 a.m. for the expansion. In the best case of scenario, the expansion will happen before 11 a.m. I have now relatively equal highs over here, which are the buy side liquidity, don't have any kind of sell side liquidity. So the buy side liquidity should be taken. It's not good at all. That low is the order block low here. It should not be broken. Tap to this gap, that means it can be little consolidation before going higher. Little more consolidation. Not going to change my mind to think about sell until it doesn't reach over here. And to that specific buy, my stop loss is just one tick below this fair value cap over here, or just one tick below that fair value cap. One candle closed below this inverse gap, another candle has closed inside this gap. Acceptable as a fake breakout to trade this fair value gap one more time. Next time it will close below this gap, that means this entry is in danger. If it failed to close below this gap, instead it close above, that means this setup is absolutely fine, and it will give me the profit as well. It's not a good. The way it has closed below this gap, it's not good. Now it's in danger. It can be stopped out. This entry can be stopped out. Not 100%, but it can be stopped out because this has broken. There was the fake breakout, but one more candle has closed below this gap, so it can be stopped out, this entry. But still I have the support to this fair value gap, so still this is still valid until it's not going to breach that fair value gap. It will wait until 11 for reaching to its destination. Where here I have this buy side liquidity, this high and that high, they are now relatively equal highs, which are the buy side liquidity. It will take the buy side liquidity at least here, which will be the first partial for the next entry. That means I'm talking about this entry. That entry's partial should be here, around this area, which is around this area. 25 handle partial should be taken over there. not this one. Okay, this entry's partial should be here. I'm only interested to take the partial around 90 handle, as I took some losses here, so I would love to take the partial over here for that specific entry. Otherwise I'll get stopped out. The stop loss can be to the break even. After that big run, the stop loss can be to the break even. It's okay, but yeah, that is what it is. But this entry's partial should be here because my stop loss is very tight over here. Just going to leave this fair value gap, which in other word, this fair value gap should not be traded, though it has traded little bit. It is acceptable. Okay, but it is possible after taking the partial here, stop loss should be to the break even, and target will be here for this entry. So that is gonna be the partial, and after the partial, target is here. Before going higher, it can tap to this fair value gap one more time. I mean, just tap over here. Okay, it does not like, don't, if it happens like this, that means my whole trade is in problem. Both of them will be problem. If it close below this gap, tap to this gap and fall one more time here. If it happens like this way, my both of this trade will be in danger. I mean, I will get stopped out for both of them. It will come here to this last fair value gap, this big entry. It will come to this last fair value gap. I'll get stopped out to the break even, and this one gonna be stopped out obviously over here. So if it happens like that way, but it can tap to this gap and then keep going higher, it is acceptable. What do I mean by that? Like here, tapped there, go here, it's okay. This is clean highs, this high and that high. They're the clean highs, which I'm going to think that is gonna be taken. These clean highs will be taken. Just don't wanna see a body close by one candle, like one candle, simple one candle will go through this gap. I don't wanna see that, just that. If it happens, then both of this entry will be in danger. Like one candle just go and close below this gap, like 2-3 candle take and close this below this gap, it's okay, but one candle boom close below this gap, both of this entry will be in danger. Because before taking this buy side liquidity, which I write it down as a partial, it is the buy side liquidity now, this high and that high, clean highs. So market will take that clean highs after trading this last fair value gap from 1 minute chart. So all of them will be stopped out, this one and that one, because here my stop loss is at the break even now. So I don't want to see any one candle close below this gap. Just one candle close below this gap is dangerous over here. Okay, Marquis. Marquis, if you are bearish, please look for the sell opportunity. I'm not bearish. I'm still thinking about the buy, and I believe that it will keep going higher. Okay, so if you are thinking about bearishness, please go for that. I'm not bearish until here, until this last fair value gap. I'm not bearish. It will come here. Then if it wants to fall, we'll see about that. But until this area, I'm not bearish. I believe that this market will go higher and it will tap over there. Because if it was bearish, in my opinion, if it was bearish, it would never come here. to this 15-minute bearish gap. It will never come over here. As it came here, I'm not bearish anymore. I have to look for the bullish market because this is a bullish market. Trend is my friend. So after that trend or that bull run, I can't think about the sell. I had the only opportunity when I had this bearish gap. If it fails to trade this bearish gap, it would keep falling until all of this last gap. As it has traded this gap, it is not bearish anymore. It will go higher. That's for sure. I'm oversure about that. I mean, my this is my feeling. Okay, I'm saying that I believe that it will go over there. That is my surety. But it doesn't mean that you can't look for sell. If you feel any selling opportunity, go for that sell. It will go higher. That is all. I believe that. So all of my losses here, like 75 handle loss, whatever it is, I took the loss because of the volatility by 3 losing trade. Everything will be mitigated over here. I will take all the profit from the market by that two trade here and here by these two trade. I want to take all of this profit from here. Yeah, this whole run can start around 11. So after 4 minutes, this whole run can start after 4 minutes. But yeah, I have to wait a bit. It would be the best if it could close above this bearish gap before 11. Before 11, if it could close above this gap, that is the best case of scenario. Yes, already took the high. Okay, let me check. Okay, this high has been taken. Okay, the weakest sister has taken the high, so strongest sister should follow this guy because she is weaker. When she has taken that high, it should take that high as well. Now it will take that high or not, I don't know. All I care, can it reach to this last parabola from 1 minute chart? That is all I want to see. Because if it reaches over here, my all loss will be mitigated. I will be profitable. I'm not interested to trail my stop loss here. My stop loss will be exactly over here until it doesn't close above that high. So when it will close above that high, which is I have written first partial, then this stop loss will be to the break even as well. This one is at the break even. This one will be at the break even again. But when it will close above that high, not even take that liquidity. I mean, take that liquidity is also acceptable in that type of situation. I can put the stop loss because that is the liquidity taken. It can fall, right? So it is little risky. So yeah, after taking that high by wick or by body, stop loss can be to the break even. For this one, stop loss is at the break even, not going to trail it until it close above this parallel gap. When it will close above this bearish gap, I'll put my stop loss here somewhere. So let me show you this. I'm talking about the price action according to my knowledge, but it doesn't mean you have to follow this. If you are bearish, please go for that. So this is my stop loss for this one to the break even, and this is the stop loss for this one here. It can spend little more time as it has traded this one. It didn't show me any kind of sign expansion. So expansion can start around 11 a.m. I prefer that body will close above this fair value gap before 11 a.m. If it happens before 11 a.m., if it can close above that fair value gap above here, okay. So now my stop loss will be at the break even. This one is at the break even after taking the partial. So I will take the partial over here for this entry. For that entry, the stop loss is now over here for that entry below that area because it has taken that high. And also it has closed above this fair value gap, 15-minute gap. I'm very happy to see that because around 11 it will come over here. That is now my belief. because it has closed above that fair value gap. Best case of scenario, it will leave this fair value gap open. I don't want to see that this fair value gap will be traded. Not even touch this fair value gap. Wanna say unfilled, okay. I write it down wanna say unfilled, but I don't wanna see it will tap to this gap. It should not even touch this gap. So this stop loss, after taking the partial, I'll put it over here around this area for this entry. For that entry, stop loss is over here. And for the bigger one, this bigger one, stop loss is still here. I will close this trade when it will tap to this low, and I will hold this one until it doesn't reach to this rejection block. So this is 11 candle. I want to see that it will go higher and hit the last fair value gap before tapping to this gap. If it tap over here, it is a bad sign. Then that means that it can fall one more time. I don't wanna see that. So before tapping to this fair value gap, it should come to this fair value gap. For our first entry, which is here, it has already provided 68 handle, something like that. So whatever my stop loss or losses over there, almost they have been mitigated around this area until this area, which is around there 78 handle. Didn't take any partial for this big entry, but for the smaller entry took the partial, put the stop loss over here. Don't wanna see it will tap to this fair value gap before reaching over here. It should simply leave this gap open. It's a sign when market doesn't trade the fair value gap. It's a sign I'm in rush to reach some specific level. I don't have the time to balance the imbalances. So I don't have the time. I'm in rush to reach some specific level. This candle, specifically this candle, should tap to the low. That specific candle should tap to the low by one candle. Why is that? Because after 11, when or to the top of the hour, if we don't get the run, then within 1 2 3 candle we see the expansion. So that is why I was expecting this candle will tap to this low, but instead of that it has tapped to this low. Within 3 candle we get the expansion, 1 1 2 3. So by the next candle we will get the expansion. Which way it will be, I don't know. It is illogical to think about the sell right now because market is very near to this first presented gap or the last gap. From 15-minute chart, this bearish gap has been broken. You can see body has closed above that first presented, that bearish gap. So this entry, after taking the partial over here, which is near about here, which is 25 handle, I got stopped out here, 15 handle. So this entry I got stopped out. So I'll remove this one and that one. This one still I'm holding it until here. From 15-minute chart, this is that order block. I don't see this one as an order block, but either way you can watch this one as an order block as well, which is the top of here. This is the top of this order block, but I don't want to see this one will work as an order block. I want to see this will work as an order block and send the market higher. As it has been filled, this one 100%, would love to look for another breaker block entry over here. So I'm going to remove this one, love to remove this one as well, would love to mark this gap here, want to see it will work like this way, this way. Before doing this, it can fall little more fall, because the bullish parallel cap has been broken, so it can fall little bit, okay. But if it doesn't fall and closed above this parallel cap by one candle, that is the best case of scenario to think that is going to happen. So if it can close above this parallel cap by one candle, which didn't happen, if it could do that, I would put my stop loss here around this area. As it didn't happen, I'll keep it over here below this parabolic gap, which worked at the beginning as an inverse gap. Tap, went higher. Next time market will close above that high, body close, okay. Body will close above that high, my stop loss will be below that low. Just took that liquidity. If it just took that liquidity and then started to fall, or any kind of bearish gap around this area, if it make any kind of bearish gap, then I will put my stop loss around this area. If it make any kind of bearish gap around this area. If it doesn't make any kind of bearish gap after taking that high, my stop loss will be there around this area. Whoever would love to look for a sell from here as well, please go for that. I'm not interested to look for sell at least until reaching to this first presented gap. According the way I have explained this bearish gap, I would love to believe it. It fall little bit to trade that order block here, to trade that order block to go higher again. I'm happy to see that. So let's see if it can close above that line. Perfect order block, and the mean threshold of that order block. You have to mark the mean threshold of that order block as well. So this is the mean threshold of order block, which is to the top of this parabolic gap. Clean highs, new buy side liquidity. So if it would love to fall little bit to take the liquidity, then it will go higher again for that buy side liquidity. That is why my stop loss is still over here. So far it has provided, this entry has provided 71 handle, 72 handle, something like that. You can keep seeing that. I would love to see the body close. If the body close above that line, my stop loss will be below that low. Like, took some liquidity, not interested to trail my stop loss. Will get a stop out here, I'll be happy with that. Whoever is looking for sell, please go for that. The reaction from the 50-minute order block, tap to this 50-minute order block, bearish order block, just a little reaction. That reaction can send the low, which is a liquidity. After taking that liquidity, it can go higher again. Best case of scenario will respect the 50% of that week. That is the best case of scenario if it can respect the 50% of that week. Hi Ketikan, what is all about my trading? Why you are always curious about my trade? Why is that? I need to know that, brother. Please tell me why you are always curious about my trade. Think about yourself, brother. Need the speed now toward that area. Little difficult, but still the logic was here that this bearish gap should not be touched. That market should not touch that bearish gap after that big run. It should not even touch that bearish gap. If it touches that bearish gap, that means it doesn't want to fall before reaching to some certain level. Here, there is some unfinished business, which is the first fair value gap after 9:30 or the last fair value gap from 1 minute chart. This is that unfinished business. Even if this market would love to fall, it can fall after trading this fair value gap. So I would love to hold that run until this area, and then maybe I'll change my mind to think about the sell side liquidity. In other words, I don't have any sell side liquidity. I have just nothing over here. I have this volume balance, which is bearish volume balance, has been violated here. Also the bearish gap from the daily chart, daily volume balance, daily bearish gap. Both of them has been violated over here. When they have been violated, in other words, from the hourly chart, if you take a look, this is that hourly bearish gap, sorry, bullish gap. Yesterday our expectation was market will come here to this hourly gap. More specifically, there was a 1 minute fair value gap 50%. It didn't reach over here, it's okay, but tapped to this hourly gap, then keep going higher. The overnight big run, it is keep going higher. So when it is keep going higher, this was just a reaction or made that fair value gap, tap to this fair value gap one more time from hourly chart, should keep going higher. And here this obvious liquidity, if you remember, there was the hourly bearish gap. I told that if market can close have that hourly bearish gap, then this buy side liquidity will be my target. So here this buy side liquidity is my interest to see, can it go for that buy side liquidity. So I would love to see this market will go for that buy side liquidity. It doesn't need to reach over here, but this is my interest to see, can it reach for that buy side liquidity. So far it has been respected that week 50%, I guess. Yeah, you can see here, tapped to this week 50% perfectly, respecting it. So what I will do, as it is respecting, I'll put my stop loss below this low, which is the 50% of that week. So on tick below that low, as it is supporting this price, which is also in last fair value gap. And here the order block is holding the price. This bull, I mean this gap, which should work as an inverse gap, as I told, It is also holding the price. As you can see, the mean threshold of that, the 50% or constant encroachment of that gap is still holding the price. All I need to see a body close above that line. This is just a reaction from that 15-minute order block here. From 15-minute order block, reaction sent the market again until the 50% of that wick. It could take that low before going higher. It was also acceptable, but as it has been respected the 50%, I'm convinced with that. So I don't need to think about the market to come back again to take this relatively equal lows before reaching over here. That is why my stop loss should be safe over here, not below that low, not below that low, below this low. So around this area, below that low. Just need to wait a bit until body close above that line. I'm watching this order block. It is holding the market. This order block is holding the market. Happy to see that. And did it trade the mean threshold? And also it has traded the mean threshold of that order block. It is cool as well. I hope that I won't get stopped out before reaching to the area I'm watching here. Before reaching to this area, I won't get stopped out. That is my interest. But the way it is spending the time over here, not reaching to the area I'm expecting, it is like not good thing to keep the stop loss around this area. It's not a good thing. So better get stopped out over here. In the meantime, maybe I could take a partial here now, as it is just spending more time. So I think randomly I can take a partial over here, just because it is not providing me the run what I am expecting. It is not providing me that run. So it can be a partial area. Anywhere here, okay. Just randomly just push the bar. I mean partial. I need the speed here, but the way it is spending, which is time distortion. Market is doing the time distortion, which is low probability to hold the market here until this area. It's a low probability now because market is doing the time distortion over here just above that 15-minute last fair value gap. So if it wants to make it a fake breakout from 15-minute chart and then start to fall again, I don't think so. It's a good idea not to take the partial and hold the partial until this area. So randomly we can take a partial over here, which is not a small. Okay, to be honest, it's not a small, like 66 handle, 67 handle partial, something like that. And maybe I'll get stopped out around this area, around that area. So let's see. Just because of the time distortion, I'm talking about the partial. The very next time candle will close above this order block, one tick above that order block, I'll put my stop loss below this low. which is going to be my perfect propulsion block. If it can close above this order block, one tick above that line, my stop loss will be below that propulsion block. It has to close above that line, otherwise I'll get stopped out over here. So something like this. If it closes above that line, okay, now it has closed one tick above that line. As you can see here, it has closed above that line. My stop loss is below that low. Now this is my propulsion block, which should work as a support. Now here this one should work as a support, propulsion block as a support, and market should keep going higher. Here I will get another unfilled gap over here. After trading this order block, everything, I will expect another unfilled gap, and market should keep going higher until this low of this first presented gap or the last travel gap from 1 minute chart. Body should close above that line. If it happens, I'll put my stop loss below this candle which has traded this propulsion block. That means body has closed above that line, make a fair value gap over here. I'll put my stop loss below that line. Until the body doesn't close above that line, I'm not able to put my stop loss here. Okay, so body has to close here. The best case of scenario, if there is a fair value gap, then trailing the stop loss, but I won't take that risk because it has taken that high here, then it has taken that high here. So one time it has taken that high, next time it has taken that high. It is three drive pattern, 1 2 3. So I really don't want to take that risk. The body will close above that line, my stop loss will be here around this area. I'm going to believe that this market is not coming back again to this order block or this propulsion block before tapping to this low of that first presented gap. So stop loss will be here. And as I told that randomly I will take a partial over here, so I will hold my trade until this area, which is 90 handle. Best case of scenario, wait until a bullish fair value gap over here, then trail the stop loss. If there is a bullish fair value gap, that is the best case of scenario to put the stop loss from here to here. But as it has did the three drive pattern, this is first time it has taken that high, 1 2 3. So three drive pattern can send the market lower again. I don't want to take that risk, so we'll put my stop loss over here, and we'll prefer that fair value gap will be unfilled around this area. Unfilled, at least before tapping to this first presented gap low. So if this candle failed to close this fair value gap 100%, I'll trail my stop loss again. But if it closes it 100%, I'll keep it over here and I'll accept that loss. Okay. So far it has provided us 86 handle. You can see 86 handle, way near to our target. I wish that I will get my boom, and yeah, this is what it is. So whatever I have done here, I got some losses around this area. I know that it was possibility to go higher, but it didn't work. Tried 2 times because of the volatility. It was huge volatility, so my loss was bigger. I don't know why this is this much volatility. I was bullish. I want to look for this buy again, and I would love to mitigate all of my losses with some profit here, with lot of profit over there. If I wouldn't take the partial here, then I would take the partial here to the low of this first presented gap, and I would hold my trade until this rejection block. As I told that, as it is doing the time distortion over here, I think it's a better opportunity, better things to do to take a partial around this area. So let's see if it can give us the boom over here to the low of this first presented gap after 9:30. Friday is little difficult always for me to trade. Yeah, I got chopped up here 2 times, 3 times, right? 1 sell, 2 buy. 3 times got chopped up, but I will try to hold my bias according to the logic. That logic was telling me that it should not trade this fair value gap. If it has traded this fair value gap, it will keep going higher. Here it will go to this first presented gap, and then my target will be until this area, this rejection block. Until that area, I would love to hold my trade. I would try to hold my trade until this line, which is near about. I mean, don't look at that the 133 handle. I don't know why it is too much volatile. Just because of the volatility, it is that much. But according to the price action, if you don't look at the handle over here, then it should reach to this rejection block at least over there. And if, for example, I am still some kind of, what to say, I mean, the some kind of contract is still left, in that type of situation, I would put my stop loss here. When it reached to this first presented gap, it could be like the stop loss. Now I will trail my stop loss too fast. As soon as I will get the opportunity, I'll trail my stop loss. Maybe I'll put my stop loss over here. When it will be around this, I'll put my stop loss over here. When it will go little higher, I'll put my stop loss little higher, something like that. Okay, this is how I will work with the stop loss right now. The logical level has been traded. This is the logical level has been traded. I'll trail my stop loss in time. Okay, so right now it is here. It will just go a little above. I'll trail my stop loss below the down close candle. Whatever down close candle it will make over there, I'll put it below that candle. My all loss will be mitigated by that single run. I'm not going to change my mind, and I'm not going to think that this market is going to fall. From the beginning, try to understand one more time why I was looking for that buy. Sell was valid over here. When I got this market structure shift, I saw this high has taken all the liquidity, has been taken, gave me the market structure shift, took that sell. Didn't work. Perfect. Still this sell is valid until this high is not taken. When this high has been taken, gave me another market structure shift after taking the liquidity. This low has taken over here, gave me the market structure shift, fair value gap, took the buy, stop loss was just below that low. The candle has made that fair value gap below that low. Got stopped out, closed one more time above here, tried one more time buy, didn't work over here. So that buy didn't work. It should work over here, it didn't work. Start to respect this bearish gap. I know that it should not respect. Yeah, if it is overzealous, it is Friday. You have to understand it's Friday. So fall more, take that liquidity. Perfect. No worries. Again, market structure sheet, fair value gap, entry gap, another buy from there. Perfectly, I'll take the buy. Come until this area, expecting this last fair value gap will work as an inverse gap here now. So we'll have to take another buy over here. So another buying opportunity. This fair value gap, would love to see market is not going to touch it, but it has tapped over here. It is acceptable. Stop loss should be on tick below this fair value gap. To the top of this fair value gap will be entry. This is the last fair value gap rejection. You know, in my YouTube channel, I have already uploaded this long time ago. Another buying opportunity when it closed above this fair value gap, tap to this fair value gap, love to take the buy. Stop loss one tick below that fair value gap. Target is this low. In the meantime, I'll take the partial, maybe if it can make any kind of relatively equal highs. This whole trade I'll hold until this rejection block, which is over here. Okay, so actually tick by tick, maybe one tick below that rejection block. Not exactly rejection block, one tick below that rejection block. So until this area, 13600. So it has made this fair value gap or whatever it is. Next bull candle I'll trail my stop loss. Next bull candle. Otherwise, maybe I'll put it right now here around this area. Just cover that fair value gap. This fair value gap. If I get stopped out, I'm happy with that. So that is all about the market. But didn't want to change the. You have to understand the logic why this market will go higher. That logic is important. It doesn't mean that I know when it is going to work. No, I don't know that. As you see, I got chopped up here. It's okay. But when I saw this fall, I wasn't feeling like this is going to fall. I will keep looking for buy. Keep looking for buy. Every single fall is an opportunity to look for the buy. Every single fall is the opportunity to look for the buy. here when it will come here around this area to this rejection block, come back again, closed below this first presented gap. That is the opportunity to start to look for sell again. Where is the sell side liquidity? See this obvious liquidity, this low, this is the obvious liquidity, and again this is the relatively equal lows. So another sell side liquidity. So if it can come to this rejection block, it doesn't need to come to this rejection block, but if it come to this rejection block, that is the best case of scenario. That is the best scenario. Okay, come here, make a bearish gap here from 15-minute chart, start to look for sell until the sell side liquidity, whatever it is your here. See this sell side liquidity, relatively equal lows here, relatively equal lows. All of this sell side liquidity will be my target. But after getting that bearish gap, don't just change your bias and don't start to think that this market will fall. It should not fall because it is a bullish market. Try to understand this fact. Look over here. After trading this area, whole midnight market was going higher. Came to this 15-minute last parallel gap. After coming to this last parallel, when did it come here? Before the session. After the session started, this is that 9:30 candle. Around 9:30 market started to fall. Okay, I'm happy. After that big fall, market also make that bearish gap. Perfectly, it has made that bearish gap. In this big fall, that bearish gap should be untouched. It should keep falling. What do I mean by that? For example, look over here around this area. Just think about that way. Actually, not from there. Let me go to the hourly chart because this is the hourly things. Okay. Look over here. When market came, that big fall happened, came to this hourly gap. Look at the first parallel gap. Where is your first parallel gap? Now it is very small. This is that first parallel gap from the hourly chart. After making this first parallel gap, it wanted to go higher. Tap to this gap, started to go higher. Now I would love to use the 15-minute chart now because that was the 15-minute rejection from there. That was the 15-minute rejection from the 15-minute chart. It was the 15-minute rejection. Inside the session, that big bull move, bear move happened over here. That big bear move happened. Perfect. Made this parallel gap. What should it do? Doesn't need to go back again because this candle closed there. It closed here. If it closed there, for example, it closed this candle, closed here. Then this candle opened, trade this parallel gap, keep falling. Acceptable. But it has reached until this area, then closed there. What happened? Opened, go there. Why? Why do you need to go all of this area? Yeah, if you love to go little higher, trade the 50% of that week, which is a where you will find some kind of fair value gap or something like that. For example, in this area from 15-minute chart, maybe where I can say, let me remove this one. For example, this is a fair value gap. Okay, just for example, this is a fair value gap. So I would love to mark this fair value gap. It came here, closed there, right here. So next candle open, trade this fair value gap, went higher, acceptable. But think about that. This candle made this fair value gap, then closed there as a bullish candle. If it closed as a bullish candle, the next candle open doesn't need to reach until this area. I mean, think about the momentum. This is a bear candle. Perfect. The next candle opened there, trade this fair value gap, perfectly went higher. No worries about that. Look about that. Another fair value gap, right? It has made another fair value gap here. This candle made that fair value gap, closed as a bullish gap. Now this candle opened. Come back again to trade this area. Why is that? Why you would love to come over here? You should give me some kind of momentum that will tell me I'm still bullish. Feel like that way. I don't know I'm getting it more complicated or not. This is a bear candle. The next candle opened there. It opened here. Trade until this area. Then closed here. Around this area. It closed there. Next candle open. Trade this fair value gap. What I'm looking for. Obviously bearishness. This is a bearish market now. This candle came until this area, then closed as a bearish, fall until this area, closed over there. The next candle open, what should it do? Keep falling. Or if it would love to go little higher, obviously trade the 50% of that week, because this is a bullish market. 50% of that week, or think, don't forget about that 50%. It will go little higher, keep falling perfectly, because you are expecting this market will fall. It is not going higher anymore. It is falling now. It doesn't need to go higher again. It went higher again until as a bullish candle it came here. What does it mean? No, I'm not falling anymore. I'll go higher. I'll go higher. I'll go higher. Until where? Until some rejection block, or until maybe this is the 50-minute last parallel gap constant crossment rejection, low rejection. Maybe, I don't know. Maybe until this low rejection, and now market will start to fall. Acceptable. Let him make a bearish gap around this area. It has made this bearish gap. Observe that bearish gap. Why I always keep saying to observe that bearish gap? Here the situation was different. Okay, this candle, the way it closed here, the situation was different. That's why my interest to look for buy. I wasn't looking for sell because of the way it has closed by a big wick, body closed there. This was the situation after 9:30. So around 9:30 or after the session open, it should be momentum. It should provide me the run toward any side, either the sell side or the buy side. Provided me the buy side, okay, then I'm gonna believe it that it is going higher. So every kind of buying opportunity, I'll go for that. No sell is valid for me. Am I making this much more complicated? Because if I'm making it much more complicated, I will show you by other area as well. I mean, if you don't get the point, then I will try to find some other area. Then I will give you more examples, because this is some kind of a specific situation. You have to feel it. The way it has done over here, you have to feel it. So I will give you both buy, sell, both area. I will show you from finding other area in this market. For example, here, think about that area. Market came here, make this bullish gap. Okay, there is the bullish gap. Now this candle closed there. Now if this candle open, come back again to this fair value gap, what do you think? What should I think? That this market make this fair value gap by that bull candle. Maybe after trading some specific area, a specific zone, it has made that bullish gap. So it closed as a bullish candle. This candle open, trade until this gap again. What does it mean? It means it doesn't want to go higher. It should keep falling. It closed there, momentum, keep taking the momentum, keep going higher. Perfect. Look over here. This is a fair value gap. Okay, after that big fall, look at this candle. How it, there is no fair value gap. Okay, but think about that. Maybe there is a fair value gap. Maybe there is a fair value gap. After the big run, it has make a bear candle. Maybe there is a fair value gap. How this fair value gap is going to happen? As a bull candle. So this candle open, trade that bear gap, then fall. Acceptable. But think, this candle closed as a bear candle as well. Make a fair value gap. Then this candle, next candle open, trade until this gap. What does it mean? It will keep going higher until the next liquidity or next line of the scenario. Okay, for example, here, look over here, make this bear candle, then this candle open, make this bearish gap over here, then this candle closed there. What does it mean? This candle should keep holding the bearish momentum. It should keep holding the bearish momentum until next certain level, whatever the certain level is. Here the time is important, the way market has closed, everything is important. Now if this candle open, go little higher, how far I am going to expect? This immediate rebalance 50%. Until that 50%, this candle can reach until 50%, it will start to fall again. I don't want to see this candle will trade this gap, because this candle has closed like momentum, showing me that I'm bearish. So don't think about the bullish run again. Look over here, this candle. Okay, there is a gap. Then that make that things make this down close candle. This candle open, closed there. There is a gap, a small gap. Now this candle open, how far it can reach? 50% of that week. It should not come back again here. If this candle come over here, that means it will go higher again. It reached until this area, boom, fall again. Look over here. Closed there. This candle made this fair value gap. Now here is no wick. Okay, closed there. What happened? This candle opened, trade this gap, again fall fall lower. It has to give me the lower one. It has to give me the lower one. It tapped to this gap, closed as a bullish gap. What does it mean? It will keep going higher. I have to think about the buy down. Then is, as you can see, it reached over here. Then next candle come back again here. It went higher. Just went higher. Now how far it will go, it doesn't matter because we don't need that like keep going higher for the momentum. There is a lot of other things, you know, that like lot of fair value gap or all other things. We have everything over there, but the way it makes, now think about that. This is a bullish candle. It's not a bearish candle. It's a bullish candle, and it make a fair value gap over here. It's a bullish candle. The next candle open, trade that fair value gap. I will start to think about sell. Fall. Okay, there is a bearish gap. This candle, how did it close? Here, make this bearish gap over here. This candle, what should it do? It should keep falling. Why? Because it doesn't need to reach back to this parallel gap again. It came to this gap. What does it mean? It will keep going higher. This is some like look over here. This one. It has made this parallel gap. How did it make this parallel gap? As a bull candle. Now this candle open, trade this parallel gap, then fall. Acceptable. It trade this parallel gap, then fall. It is acceptable. But this candle closed as a bear candle, and there is a big wick. There is a wick, like something like that type of wick here. Then this candle open, trade the 50% of that wick, then fall. Acceptable. But if it come here to this gap, first thing, this is a bear candle, not the bull candle. This is a bear candle. There is a long wick. Okay, so this candle open, trade the 50% of that wick of that bear candle, then keep falling. Acceptable. But if it come to this parallel gap, what does it mean? That means it wants to keep going higher. So this is kind of momentum. You have to feel it. What happened here exactly to this area? This is a bull market, extremely bull market. Come back again. Where did it came? To this volume balance, using it as a bullish PDRA. After reaching over here, it has made the bearish gap. How it has made this bearish gap? This candle closed there. When it has closed here, next candle open, trade until the 50%. Okay, acceptable. Maybe it went little higher of this 50%. It is acceptable as well. Fall, boom. It will keep falling for that last fair value gap. What happened? It come back again, trade that gap, that bearish gap, closed around this area. When it has closed about this, what does it telling you? Now I am not interested to fall, because if I wanted to fall, then maybe even if I trade that fair value gap, I would be a bear candle as well. But I'm showing you that bullish momentum supporting this PDRA. Whatever PDRA you have over there, that is PDRA, it is holding. So it came here, overzealous little, took that liquidity, closed there, open, boom, 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 until the low of this 15-minute last fair value gap. Consequent crossment rejection, low rejection. Is that, do you get it, man? Little difficult, but do you get it? It's all about the feelings. I can't transfer the feelings, but I can explain why I was feel like that bullish run instead of the bear run. Okay, let me show you one more example. Exactly from here. Okay, so this is a bull candle, like over, no, not that one. Here, this is a bearish gap, bullish gap. Okay, that candle has made this gap. Where did it close? Here, as a bear candle, and made this bullish fair value gap. So this candle open, trade this fair value gap, went higher. Acceptable. But think, this candle opened, closed there, made the bullish gap, and this candle closed there. Now next candle open, trade this whole area, the whole candle trade, and come to this bullish gap. How can you think that it is going higher again? You will simply think that, okay, it has taken that liquidity by that week, now it is falling, this bullish gap is gonna be violated, maybe it will work as an inverse gap. It's not going to work. But the way it closed here, open, manipulation, trade that fair value gap as a support, keep going higher. Acceptable. Do you get it, guys? I want to see that this past presented gap provided me 25 handle or not. Okay, so I'll have to remove all of these things. Where is it? This is the first time market tap to this gap. I'll go with the logic the way we actually use it. Tap to this gap here. Stop loss has to be above that candle which has made the first presented gap valid. So to be honest, it's gonna be huge, but I would love to see the way it should work. Did it work like that way or not? And should provide me 25 handle. 25 handle. Okay, it didn't provide me 25 handle yet. So today maybe it won't work. I don't know. So 25 handle should be here. Okay, so 25 handle here. Yeah, it didn't give me the 25 handle yet. Don't look at the stop loss, but just want to see if it works. When I will see that 20, this is more than like this type of things, 20 more than 20 handle or 25 handle, I won't take this one. But this is just for my counting how many times market work from the first presented gap according to the rules. The candle will make the first presented gap, stop loss is above that candle, and target is 25 handle. How many times does it provide me 25 handle? Just because of that, which one I will take, which one I won't take, it depends on the stop loss. If I see the stop loss is like huge, I'm not going to take that entry. If I see that maybe until this area where I'm able to put my stop loss above the candle which has made this travel cap is like 20 20 18 20 25 5 handle, at least 25 handle maximum, then I'll take that on. So it worked today as well. The first presented cap worked yesterday, the day before yesterday, it worked 3 days in a row now. Here is that 25 handle provided me. Let's look at the yesterday's first presented gap here. This is that first presented gap from yesterday. This is that first presented gap from yesterday. Can it provide me 25 handle from that first presented gap? Stop loss has to be above that candle which has made that first presented fair value gap valid. Here target is for 25 handle. 25 handle has been provided me around this area. Yesterday also it has provided 25 handle. The day before yesterday, nine thirty. Okay, it doesn't here. This is the first presented gap after 9:30. Let me check. For the first time it tapped to this area. Target is stop. Here is the entry. Stop loss should be below the candle which has made this first presented gap valid. Target is 25 handle. Whatever. I mean 25 handle has provided me that. Then the before the yesterday, let me check that on. It didn't work in this day, I guess. 9:30. Yeah, that was the 9:30. There, this is the 9:30. It didn't work in that specific day. It didn't work. So entry is over there. The stop loss should be above the candle which has made this first presented gap. Target should be 25 handle. It didn't work for the first time. It tapped over there, stopped me out, which Tuesday. Let's see the Monday. In 4 days, we have 3 winning days, 1 losing days. So let's see here, 9:30. This is 9:30. Yep, that is 9:30. This is the first presented gap after 9:30 here. That is the first presented gap after 9:30. Let me check if it provided me the 25 handle or not. according to the rules. I'll put it and I'll just observe it. Can it provide me that or not? So entries there, entries by that specific candle. Stop loss is above that candle which has made this first presented gap valid. Target is 25 handle. 25 handle. So it has provided the 25 handle over here. Worked out of 5 days, it worked 4 days. Let me check one more days. Friday. Yeah, it's Friday 9:30. Where is 9:30? 9:30, 9:30. There is 9:30. Is that the 9:30? Yeah, it is the 9:30 here. That is the 9:30. So let me check this 9:30 candle. Does it provide me 5 handle or not? First, let me check the 5 handle. Is it 5 handle? 70. Yeah, it's the 5 handle. So this is the first presented gap after 9:30. Would love to take the sell here. Stop loss has to be above the candle which has made this first presented gap valid. So which is here 25 handle. We'll look for the 25 handle which has been provided over here already. In Friday it worked as well. So 5 winning days, 1 losing days. 5 winning, 1 losing. Okay, 6, 7, 8. Thursday. Okay, Thursday was the holiday, so it's not valid in Thursday. It was a holiday. In Wednesday, 5 win, 1 loss. Just keep that in your mind. 5 win, 1 loss. This is 9:30. Okay, that is 9:30. Let me check the first presented gap first. If it is the first presented gap or not. Yeah, it is the first presented gap. I'll take the buy here for the first time and got the loss. Should be the loss. It is the loss. 2 loss, 5 win. 2 loss, 5 win. 2 loss, 5 win. 2 loss, 5 win. 9:30. From that. 2 loss, 5 win. For the first time it tapped to this gap. Stop loss has to be below the candle which has made the first presented gap. Target is 25 handle. 2 loss, 6 win. 2 loss, 6 win. 2 loss, 6 win. 2 loss, 6 win. So this is the 9:30. 9:30, 9:30, 9:27, 8, 9:23. This is the 9:30. What is the first presented gap? This is the first presented gap. Here, entries there. Stop loss is just below the candle which has made the first presented gap. Here, stopped out here. 6 win, 3 loss. Okay, I can't go much before because of the, you can see here, power of the plan. I can't go more before, more below. So from hourly chart here, that is that hourly bullish gap. Market tap to this hourly bullish gap. Market went higher. This is that hourly bearish gap, and more specifically, there is a small gap above here from the hourly chart. As I told, I would love to use this one instead of that specific gap. I would love to use this gap as my hourly bearish gap, and if this market can close above the 50% of that hourly bearish gap, if it can close above the 50% of that hourly bearish gap, I'll start to think about that buy relative equal highs. That buy will be my target. Hi, but until it doesn't close above the bearish gap 50%, I'm interested to look for sell. If it can close above the 50% of that bearish gap from the hourly chart, I'll start to think about that buy side liquidity, which is the obvious liquidity. In the meantime, this is the last parallel gap. So for the 50% of that hourly bearish gap is holding the price. I'm not seeing this small gap as my last parallel gap. I would love to keep using this gap as my last parallel gap. It is respecting. I want to see this market will fall again for this sell side liquidity from this area, this low, and that low. They are the relatively equal lows. So this sell side liquidity will be my target. I'm still bearish from a longer term, and I want to see this market will start to fall, and it will keep falling for this sell side liquidity from a longer term. Okay, and from 15-minute chart, this is that 50-minute last parallel gap. As you can see, it has traded the 50% of that 50-minute last parallel gap and the low of the 50-minute last parallel gap. So now I want to see any kind of bearish gap, and it will fall at least by today. It will come here to this area by today. Okay, I want to see it will come here to this last parallel gap by today, and then according to the narrative, market should come back again inside the weekly range, the high of Thursday or low of Sunday to Thursday, high and low. You will mark Sunday to Thursday high and low, and you will mark that range. In Friday, market should come back again inside that range. So I want to see that it will come back again inside that range, whatever the high in low maybe here. Okay, I don't know. Yeah, maybe low. This is the low, and this is the high of Thursday. This is the highest high. So I would love to see this market will stay inside this range, this high, that low. I would love to see this market will stay in this range. Whenever it will go above that range, I will start to look for the sell. I will start to look for the run toward that range. It should stay inside this range. So in my opinion, it should close, or it should come at least to this last parallel gap. Don't want to see it will keep going higher, and it will take that buy side liquidity. But as I told from the hourly chart, if the hourly bearish gap 50% is broken, hourly 50% is broken, then I will start to think about that buy side liquidity, which I'm not really interested to see, or I'm not interested to think about that way. That market will keep going higher. I would love to see this market will now start to fall, at least for this sell side liquidity. This last parallel gap from the hourly chart, from the 15-minute chart. This is the 15-minute last parallel gap. It will come to this 15-minute last parallel gap. That even if it doesn't come here, nor is at least until this entry gap, I would love to see it will keep falling. That is my interest to see. And if you remember the yesterday's price action around this area, I stopped the PM session live. If you remember that PM session live, there was buying opportunity here, there was a buying opportunity there, and there was a buying opportunity here. So 3 buying opportunity until this area, which was the midnight open, and also the new day opening gap was there. If you remember, there was a new day opening gap, and I closed my stream around this area. I told that now I'm interested to look for the sell until this fair value gap over here, at least until this fair value gap. If it is overzealous, it can reach until the hourly bullish gap, where market actually tapped yesterday, exactly to tap to this bullish gap yesterday. So that huge fall, I was expecting that I would love to catch that fall. But before that fall, I was only interested to look for buy. When it reached until this certain level, I interested to look for buy, sell. Same thing today. when market was around this area and it showed me that I would love to go higher, I was only interested to look for buy. So that is why I framed the buy setup. And when it came here, I'm now only interested to look for sell. Now is the lunch hour, but my only interest is to look for the sell. I'm not interested to look for the buy now. If it keep going higher, that means I will have no opportunity to trade this market anymore. If it can make some selling opportunity around the lunch hour, if it make the bearish fair value gap from 50-minute chart, and then all of these things happens, then around the PM session I'll start to look for the selling opportunity for these lows, which is also the relatively equal lows over here, all of this sell side liquidity, and finally until this last fair value gap from the 15-minute chart. If I'm wrong, then until the entry fair value gap. Not interested to frame any kind of buying opportunity. It will keep going higher, I'll let him go, but not going to touch it. Just I'll let him go. Okay, brother, you wanna go higher? Go higher. I don't need to touch you. So I would love to only interested. I would love to see that market will keep falling. That is all. Okay. Thank you, guys. I was a little late, and everyone, be careful. This is mental preservation, mental capital preservation day. Yeah, that was some chop. I got chopped here, but as I told at the same time, whatever loss I will get all of my profit over here. By that specific run, I'll get all of my profit. By mitigating loss, all the profit will be here because I'm bullish. I know that this market will go higher. So please believe me, still now this is January. So still now this is not precise price action. You are seeing that it is working little bit precisely, but until 1st February, first week of February, it is not precised yet. So when it will be precised, you will see how beautiful the price action is. And I believe that I will be able to show you that as well. But until February, still this is low probable area to trade. The whole January is the low probable area to trade. So make sure that you are not over trading, you are not over leveraging. The more important thing is over leveraged, because over trading is also not going to kill you, but over leveraging will kill you. Every single time you will take a loss, make sure that your contract size is same. It's not huge. Like for example, you are trading 50k account. For 50k account, maximum in this type of volatile area, 2 micro contract is maximum. That should be your maximum contract size in this type of volatile, where one candle is like 45 handle. Where was that one candle is 45 handle. This one candle, it's 45 handle. See this 45 handle, one candle is 45. This candle, look at that candle. In this type of situation, your maximum contract 30 handle. Maximum contract size should be 2 micro contract. 2 micro contract, no more than 2 micro contract. If it is low volatile, for example, one candle is like 5 handle, 6 handle. In that type of situation, you can maximum go for 5 micro contract for 50k account. No more than 5 micro contract. I'm not talking about the challenge account. I'm talking about the funded account. So for funded account, that should be the maximum contract size. So if you don't over leverage, you are not going to blow the account. Whenever you will get your profit, stop over there. To loss, stop over there. Come back tomorrow. No need to mitigate that loss by same specific day. Don't. If you ask me here, if I wait for the setup, I took that sell, I took that buy, my trade is done. No more setup. It is highly volatile. Got 25 handle loss, 25, 50 handle loss. 2 micro contract, that means $4. Two loss is $200. For 50k account, $200 loss is nothing. I'll come back to tomorrow. I'll get more profit tomorrow. So tomorrow I will try to catch, to hold, I mean, to take the entries and to mitigate all of my losses by tomorrow, not today. So this is how you should keep going. And I hope that everyone will be able to understand this part. By the way, if you are with me in my Twitter, please watch this one. The whole night I was watching them, and I keep sharing them. Please watch it. You will understand whatever I'm saying. You will get everything. This is not me. This is from some specific person. They're profitable. Okay, they're the boss, real boss. Just listen to him. This guy, this Tom. He's a boss in trading. So what did he say? Listen to him carefully. Listen to him. Whatever he told, this is the truth. Just one trade per day is all you need. Change my mind. This guy, just read this trade by J Trader. I really don't know who is he, but he has like 26k follower. So still good follower, right? Not like me. I have just How many followers do I have? Maybe 3,000 to 2,800 followers. So I'm nobody. But these guys, what they told, okay, just listen to them. Just these two posts will change everything. Whatever I keep saying, I keep saying, you guys just listen and then take your decision, because it's not possible to be profitable without stop over trading, without stop over leveraging. It's never possible. Yeah, you will get some profit here. I mitigated my loss, but what if it wouldn't work? What if it would fall? More losses, then more losses, then more losses. I will keep taking the losses until I blow the account. So please don't do that. Took two losses, not working. I was overzealous. I was like, it will change your mind, because if you know that you are not allowed to take more than two trades, you will never push your button in an illogical level. For example, that fall, maybe you will not, I would not go for that sell because I am not convinced yet. It didn't trade any higher time frame period. That high didn't trade any higher time frame period. From 15-minute chart, as you can see, I took my sell from that candle. This was the candle where I took my sell to that specific candle. There was no higher time frame period, so I wouldn't go for that sell maybe. So in that type of situation, here when it came there, trade this parallel gap, maybe after that I would start to look for buy, with depending on everything, because I know that I'm not able to take more than two trades. So if I take losses, it will be a losing day for me. I will wait more patient. I'll be more patient. This is the theme of not to take more than one or two trades. By the way, thank you so much guys for being over here, and don't forget to leave a like. Don't forget to subscribe to our channel before leaving this stream. If anyone has any question, let me know. Otherwise, I'm done. Anybody? Any question? Let me know. Please don't forget to join us to our Discord. You will get the link in the pinned comment. If any of you are interested to join our free Discord, no, fake money. You don't need to pay any money. Then please. Thank you, Indian. Thanks for that buy. Because if you write down buy, I understand that, okay, it's done. Nobody has no question. Do you have afternoon session? I don't think so, brother. I don't know, brother. But I can come around 3 p.m. That is my golden zone for trading in Friday. So I can come 3 p.m. Not a promise. Thank you. Bye-bye.